Find it very bearish that BlackRock and all of those asset managers, like, despite the BTC ETFs being like a resounding success and pulling in that amount of flows, they couldn't get ETH to piggyback off of that success. One thing that makes me like a little more bearish is that towards the end there, like it feels like metagame got too self-aware and too extractive. And I wonder if that kind of stops people in the future from participating.
Is it going to stop us?
Probably not.
Yeah, I don't think it's a bad thing. I don't think it's inherently bad. I think it's just, this is what happens when you make it so easy to create liquid assets in markets.
Welcome to what we're now calling, I guess, the Shoot the Shit podcast, name to be determined. Basically, we get the enterprise team to hop together and talk about some different topics. This one, we're going to talk a little bit about macro market structure, crypto's role as a risk asset. Is it going to be able to pivot into kind of new narratives that keep popping up? Talk a little bit about ETFs, a little about new narratives that we like or don't like, and then give a little bit of hopium at the end. So I think it'll be fun, and let's kick it off. I was thinking we could just jump right into it, start with some higher level kind of macro and market structure things. So during the uptrend, like there was a risk on environment, but it also felt like there were some crypto specific things that were pushing us up. And on the downtrend, it's starting to feel more like we're becoming kind of higher beta to the NASDAQ. So in that environment, it looks like crypto is kind of a way to express risk. Do we still think that's the role of crypto, of Bitcoin in wider markets, is just being a risk on asset? Or do we think that's finally starting to evolve?
Yeah, I can probably chime in. I think that, we're definitely a real asset class now. We do enough volume. There's enough liquidity. Bitcoin is tradable on multiple different venues. So, we're just an asset class. We are higher up on the risk curve. That's kind of been our role. And I think last year we kind of exhausted a ton of idiosyncratic bullish crypto catalysts, you might call it. The ETF announcement, Trump's election. I think people were starting to form expectations around a strategic reserve. And so at this point in time, it's gotten to the point where there's just not enough crypto specific juice, so to say, to get us to decouple from broader risk assets. And I think with the level of uncertainty right now across equities and bond markets, it's tough to see us breaking apart from just being a high risk, high beta asset class for now. Obviously it's much more pronounced in crypto. If the NASDAQ is down 4%, your alt might be down like 50, but I think that's our role for the time being.
I feel like in our head, we all think like it should be like a safe haven asset. Like that's kind of part of the reason why we're in the industry, and we're obviously not that. Like you look at gold versus Bitcoin price action lately. What makes that change? Like, is there a trigger? Right? You think of gold, when we went off the gold standard, we had this crazy time of price discovery there. It was super volatile. And then all of a sudden it was like the safe haven asset. Is there, I guess, how does Bitcoin?
I think personally things have to get really, really bad for Bitcoin to become the safe haven asset. And that like short-term volatility, whether it's from just inflation or whatever, macro liquidity conditions, I think it's not enough for people to like structurally shift how they perceive Bitcoin as like, a store of value, like the real digital gold. Right now it's still speculative. So I think like things need to get really bad where like there's nowhere else to go. Like confidence in the dollar is collapsing, like the current financial international monetary system is kind of seeing its last days. Then I think Bitcoin becomes the obvious choice as the best safe haven asset. Alternatively, I think like if Bitcoin actually gets to gold's market cap, 10 to 20 trillion or so, and there's like a lot less upside, I think volatility is going to decrease at that point. I think like investors who would typically shift capital to gold would also start shifting to Bitcoin. So I think either economic disaster or Bitcoin basically rivals gold. There's not much upside, so we'll have less volatility.
Yeah, I think you can get there just on a gradual increase in ownership and market cap. And you're still placing a bet. Like people ask why is Bitcoin a store of value? And people ask me this all the time. Like, why is Bitcoin considered a store of value when it's so volatile? You're basically betting on it to become that store of value, like digital gold asset. Like that's where the risk slots in. And so if you're buying Nvidia or you're buying Apple, you're betting on it to achieve certain things in the future on a productive level, on like a business level, maybe on a P&L level. For Bitcoin, you're just kind of betting it on it to become widely owned, perceived as a store of value. And so right now we're still kind of on our way there. Yeah, that's how I would kind of explain away the volatility. Is you're still taking risk to bet that it becomes digital gold, because right now it's not.
I feel like it's still so early too. Like we're like 17 years into this, right? Like I think having an expectation that we are going to be digital gold at this point is like just not zooming out a little bit and realizing that like the amount of time that this asset's been around is still significantly less than other stores of value. And there's a lot of trust assumptions that you have to make at this point to like consider Bitcoin as a store of value versus just investing in something like gold.
I kind of think like the way we've set it up with these asset managers pitching the ETFs, there's going to be like a transition period where Bitcoin's kind of in this like liquid alternative bucket that like people might bucket with other commodities or like just like alternative strategies, like anything like managed futures or something. And before it becomes even close to being like a safe haven, it's just kind of this extra thing that you could add to your portfolio that is sometimes correlated, but like obviously isn't going to always trade with stocks. It won't always trade with bonds, but has different drivers of returns. And so maybe we have an extended period where people, put in sub 5% of their portfolios and just kind of use it like that. I do feel like there's a problem kind of calling it digital gold because one, like on a time scale, it's just like it's never going to meet the same standard. And two, a lot of people just don't even own gold, even though it's going through all-time highs now. Like your average investor has just been like DCAing into like some sort of 60-40 or some Vanguard retirement plan that's like 80% stocks and like pretty much just in bonds, and they have like no liquid alts exposure or any type of other exposure. It's like they don't even really own gold or physical commodities or silver or anything. So in some ways, it's not the best target for us because it's like a lot of people don't even include that in their portfolios. And if we're hoping for it to be this like permanent fixture in how people save and invest their money, perhaps there's like a longer transition period ahead where it's like this, it's not as good as, it's not going to be as good as gold for these periods. And it might be kind of correlated with some things that we don't think it should be correlated with in the short term.
Yeah, I'll also
It's the
add
people's
like
gold.
when you think about actual gold ownership, like self-custody of gold hasn't been like a widespread thing in like centuries, right? So like most gold reserves are held in like Fort Knox in the US and central banks, right? We developed our fiat or what became our fiat currency, just pegging the gold that are held in these locations. The people holding the gold themselves, like it was literally seized in many cases. Like the US government would seize your gold or force you to sell it to them, for broader monetary policy. So I think like for Bitcoin to actually become a store of value and be ubiquitous, people need to self-custody it. I'm not sure the infrastructure is really there on a global level where people really understand how do I hold Bitcoin in a wallet? How do I create a wallet? How do I, bring my fiat onto this on-chain system of gold? I think it's actually much easier to do that for meme coins than it is to buy Bitcoin right now, which I think is interesting. So I think like self-custody is still a massive issue. And like we actually need to shift away from national reserves to individuals holding gold for it to be a vastly superior store of value from like, just trusting an institution to hold gold for you.
You guys don't have gold ingots in your basement?
Just physical coins underneath my mattress.
My seed phrase for gold is the coordinates of where I buried it, basically.
I have no confidence in people self-custodying. Like, I actually think that's like kind of a pipe dream. I don't know. Like, as nice as that would be, like, I feel like the success of the ETFs told you a lot about what the average participant is like willing to do. Like, there's a whole cohort that like had no crypto exposure, or like pretty minimal. And then as soon as they had access to the ETFs, like there's billions of inflows. It's like kind of tells you people are not willing to take on some extra responsibility to manage their own wealth.
Well, I would counter. It's like, let's think we have like a huge bank run, like the Great Depression. Like people actually need to save their assets. Like they're actually like scared the whole system's gonna collapse. Like at that point, the incentive to go ahead and self-custody and have Bitcoin, I think, skyrockets. So I think it's just you need that kind of catalyst. And I don't know if another event like that happens, but eventually it will. Could take decades, could take 5 years. You just don't know. But I think like that's the true onboarding event, the self-custody, where people are like, I like actually see the consequences of these institutional middlemen who can just, go bankrupt at any time.
Yeah, I also think that like that's so much more prevalent in other countries outside of America, right? Like I feel like our view is very American centric, where like we trust our financial system, right? Like we don't have these like government overreaches that are like really, really significant. But if you're from, a developing nation, like it just makes a lot more sense. And I think those people see the value proposition of self-custody much more than we might see it on our day to day.
On the like idea of a black swan event pushing people to self-custody, do you not feel like we've already had that to a certain extent? Like Mt. Gox, FTX, people still use centralized exchanges despite knowing that risk.
Well, I feel like the closest like equivalent of like what Dylan would be talking about is like the Silicon Valley Bank debacle, and like they squashed that like pretty quick. And like they'll come up with like extreme measures to patch holes in the current framework. So I feel like the black swan scenario, it's like I would be very concerned. I would think that everything would be going to zero in that scenario. Like I would be scared to hold any risk asset whatsoever. And so it's almost like why like there's going to be some sort of intervention in that scenario.
Like,
So I don't know if you
we'll have more to worry about.
Yeah, like there's going to be like violence or protests in the streets or something, like if that actually happens.
It would need to be bad enough to rewire everybody's brain, because right now everybody's geared towards trusting whatever X and Y institution looks trustworthy. Seems okay, but something pretty bad would need to happen to get everybody to change their minds about that.
Yeah, so then I think it's kind of like what we were saying on the international side, especially in more developing nations where governments are outright stealing from their people, seizing their gold outright, even if they hold it in ingots. And the only true way to hold your wealth is Bitcoin or crypto. So then like I think that's the alternative, probably the most likely in the short to medium term, is just gradual global adoption with financial systems.
I think it's like it's natural, right? Because like it's such a barrier to entry right now that like people go with convenience like 99% of the time. And it's something like decentralization where you don't think you need decentralization until you really need decentralization. So I view it in that way. Like you don't need self-custody until you like really need self-custody. It's very hard to get people there.
Yeah, I think that value prop is always gonna like be there on a long enough time frame. But then like going forward, what we just mentioned about like, oh, like is this the best way to express like a risk on view of like global liquidity, or just like is this I think the big difference between now and 2022 is, despite what was like with FTX imploding and like all the things going on then, I think there was still a consensus of like crypto native capital that viewed crypto as like the fastest horse if we are in a risk on scenario. And now that we went through like an entire cycle of sorts, and you have people like pulling out like, oh, like ETH underperformed. Actually, like ETH, BTC, and I think SPX have underperformed gold since the beginning of the year. And then we had those stats like mid-cycle with ETH underperforming like treasury bills. Like I think the fact that we had at least towards this end of the cycle or mid-cycle, whatever you want to call it, that the second biggest asset was such an underperformer and couldn't even break prior all-time highs. I do think some people will start to call into question like the next time globally assets run up, will crypto be the best expression of versus 2 years ago it was so small that was kind of an easier bet to make. What do you guys think about that? Because on one hand, I feel like as time has passed and the ambiguity around valuing some of these protocols, at least for L1s, and like whether or not they have some monetary premium, it's kind of been like investors are a bit disillusioned with like how big these things can be, and like the pie in the sky valuations seem like no longer super relevant. Like, yeah, go for it.
I was going to say, like, I think it's a different question between like Bitcoin and crypto. Like theoretically, I think we all feel like we should have a Bitcoin decoupling. Like it's a completely different crypto asset than anything else we have, right? Like a smart contract platform or a lending protocol, DeFi lending protocol is not trying to compete on that store value area. And I think this cycle kind of started to show that a little bit, right? Like I know we have like ETFs as a talking point, but like Bitcoin had strong ETF flows for a while. Ethereum never really got that. And I think that's because you're telling different stories to the investor base. So like I say so like a lot, just realized. But something we talked about a little bit after the Trump win was this has massively opened up like the investor base for Bitcoin, but we didn't feel necessarily that it opened up for smart contract platforms. Like this isn't opening a floodgate to a ton of people who are sitting on the sidelines going, I want to move all my money into Aave. And now I finally have permission to do that. Or I wanted to develop all these things and now I finally have permission to do that. It felt like the TAM for the other assets outside of Bitcoin remained relatively the same, maybe grew a little bit. Whereas Bitcoin, it really opened things up. Like now banks can get involved, now TradFi can get involved. And so in a new risk on environment, maybe that decoupling happens even further. Like we still have Bitcoin as this liquidity sink, this risk asset. Everyone kind of knows that we can pile into that. Is that the same for these platforms that we're all trading that maybe haven't grown their user base, hasn't grown their fundamentals? Is that just going to rise even more in relation to crypto as a whole? Did that make any sense?
Yeah.
No, definitely.
ETH is also like a $200 billion asset. So it's like, that's pretty large. And you might have to show a little bit more to justify a meaningful return from this level. But I think we saw a decent bifurcation where, institutional investors could express their view on crypto through Bitcoin and retail could express their view through meme coins, I guess. Like that was their risk on asset, where I knew people who were literally just, oh, we're going to have a good, like they have a bullish view on risk assets over the next few periods. What's the best meme coin to buy? Like that's what some people were eventually doing. And so when it comes to smart contract platforms, I think some of them have just gotten, Sol did really well, but I think like ETH has just gotten a little bit too big to where you're going to need a little bit more to justify a 500 billion plus valuation. I think it becomes like at that point, it's like, okay, like what, like what is this thing actually doing? So,
and I think part of it's like convincing a bigger buyer to come in, right? Bitcoin, I think that story is a lot easier versus if you're saying ETH, it's a smart contract platform, and then someone's going to ask, okay, well, like, how do I make my money back? Is it the best smart contract platform? And there's just a lot more holes to poke to get someone to kind of come in and deploy meaningful capital there.
Yeah, we also just have like no consensus way to value these things. You know what I mean? Like, I think that we would need to have something that like is kind of agreed upon by the industry. Like, okay, this is how to think about it, right? And like, I think maybe I'm wrong, but like, I think a lot of us believe that these things need to have a monetary premium to justify these valuations. So I think, yeah, like I think as we're working through the industry and like as we're thinking about how to frame these things, it will become a lot more realistic, like how these things should be valued, maybe within the next like 4 or 5 years, 10 years versus today, because it is still very early on a relative basis.
I think like the argument's also only a monetary premium could ever justify these valuations for majors, at least, right? So it's like what's like the alternative is just discounting the current valuations by a lot.
Yeah, which would never work for anything. Like, just like
I guess we can keep ticking along, but we kind of talked about, okay, crypto is this risk on asset right now. Hopefully that changes for Bitcoin to become a store value down the line. And if we look at markets right now, most things are risk off. The outlier seems like it's China tech stocks. I think that was most of our last buy. Do we think crypto has the ability to pivot into whatever the leading risk environment is and capture some of that narrative? Or are we isolated to the NASDAQ?
Did you mention China, right?
Yeah.
Yeah, I think China was just in this weird situation where China stocks, especially like Chinese tech stocks, have been so depressed, so discounted to the point where hedge funds were basically applying this arbitrary Chinese discount where if this basically people taking them off their mandate saying we're not going to touch this anymore. And there's been a sudden reversal in the sentiment there and what the politicians in charge have been communicating. and we'll see if it sustains because we've had pockets of this before. But that's kind of like an isolated situation, I think. I think it's everybody readjusting their view that maybe China is investable again. I don't know if that carries over to crypto. To me, that just seems like a one-off trade that's happening currently in the broader markets. And it's going to be tough for crypto to do well when US indices are down.
Yeah,
I think we'll definitely go ahead, Andrew.
sorry. I think, yeah, I agree with Sunny. Like, I don't see a way for us to really latch on or like feed off of positive like fiscal developments in China. Like, it's just too far removed. And like, even if say there's like some fiscal impulse over there and like we're expecting like, I don't know, Chinese retail to be like buying risk assets, like are they necessarily looking at crypto? I don't know. I feel like I have no insight there, but I do think eventually, like the one thing that the industry is good at, for better or worse, because I mean, it does produce a lot of like vapor in some sense, but like latching on to current trends, like when AI started taking off or when there was GPU shortages, we made products and services around. Whether they have sustained usage afterwards is like another issue. But I feel like right now, like there's more AI apps, and I've seen like some projects trying to pitch themselves as like, oh, like this is the vibe coding app for making apps on chain. And like there's probably always going to be pockets, and in the same way that there was like an entire agent meta, there's probably going to be another pocket that like latches on to whatever's going on in the real world. But right now it's just kind of dry, right?
Yeah, I totally agree. And I think like even in the worst market conditions, like, you know, in a broader sense for crypto, like there's always pockets of outperformance, right? Like we saw that during the bear market, like Telegram bots ripping, like they, you know, you would significantly outperform if you invest in that specific sector. So I think there will always be that. And then to your point about it latching on to trends, like I think that makes a lot of sense because like it's a liquid way to express a view on something that you might not have another liquid way to express it. Like clearly robotics is kind of becoming one of those things. Like I'm not sure how sticky that's going to be, but you know, we've seen like crazy investments in that, like in the private sector, return an insane amount of money, like Andrew, you know, Kang being one of them. So I think people want to get access to that. And if crypto is a way to express that, I think people will like make that narrative happen.
Yeah, I think we'll always try to align with whatever's hot. It's just a question of like, can we actually find good exposure to that? Like when China's stimulus was first being floated, I don't know how many months ago that was. Sunny and I spent like a week looking for China coins and just couldn't really find anything good and compelling. So gave up on that idea. But then you have something like agents are the hot thing. We can get kind of a pure play to that.
Yeah, I view a portion of the crypto buying base as just this like trading swarm of locusts that just like fly around looking for narratives to harvest. And eventually you extract every possible inkling of like flow that you can from that narrative on chain, whether that's AI or something else. And they just move on to the next thing and leave it completely devastated. That's like, that will always exist in any, I think at this point, that capital will,
I feel like
probably
the penny
exist.
stock traders of 10, 15 years ago have just become on-chain swarms. And that's just, you know, that's a subsector of crypto forever and every market.
I do feel like these past 6+ months or so, though, like we really went like all the way towards like being aware of the meta and like that whole idea of just like extracting value from narratives. Whereas I feel like in 2021, there was a lot of like legitimate hope around like layer ones and like what they could possibly be valued at if like X number of people were using them, and like we had this much amount of on-chain activity. And this cycle was like stripping away those sorts of like grand hopes for things, and people just being like, oh, this is the game that's being played, and like I'm trying to play it with other people and try to outcompete them. And I wonder if this time around, like we did really speed up that entire process of like the agent meta did not last very long. Like if you think about it, it was like you had like a good 1 to 2 months maybe, and people already started to like filter out towards like smaller cap plays. So one thing that makes me like a little more bearish is that towards the end there, like things, it feels like meta game got too self-aware and too extractive. And I wonder if that kind of stops people in the future from participating.
Is it going to stop us?
Probably not. I'll be back tomorrow.
Yeah, I don't think it's a bad thing. I don't think it's inherently bad. I think it's just, this is what happens when you make it so easy to create liquid assets in markets. And I almost view it as bullish if that sticks around, because we'll always have a value proposition that there'll be some degenerate way to make money on chain, and that's like good enough for a lot of people. I don't think that should be. I mean, it would be terrible if that was the only use case we ever found, but it's a use case. It's a use case, and we need use cases. So yeah,
I do think there's like a permanent, not permanent, but like it like shrinks and expands, but like a pool of capital that's like, okay, people have been trading these markets for X number of years, and like they're always going to be involved in some aspect, and they'll probably come back when things are risk on, just because like it's just the fastest money type of market, like far faster than any other liquid market. So I do think that's always like a permanent appeal about it.
yeah, the locusts. They're just gonna hang around, just ready to extract. You should move on.
Yeah, I was going to suggest that. So I think the last thing we have on like macro and market structures that we wrote down is talking about ETFs. So Bitcoin had some positive flows, but it's recently turned negative. ETH, we talked about, never really caught a bid. And now we're starting to see a ton of other ETFs, at least like in the works, for any random coin that seems to have reached a certain level of market cap. So trying to get at like how I want to phrase what we're saying, but do we think the negative flows on Bitcoin, the lack of flows for ETH, shining light on like institutional interest in any other asset that we have? Or do we think there are assets out there that, hey, if an ETF comes out, that will garner up some attention outside of like our little crypto pocket?
I feel like the idea is more like, if any of these assets do get institutional interest, they want that infrastructure in place so that there's inflows from at that moment. So even if like we get a move ETF and, it doesn't get a bid to start, like down the road, it might. And I think that's kind of the idea. It's like you can get more inflows. It might be a small percentage of compared to like a centralized exchange or on a DEX right now. But down the road, like you just want that to be there. I think like that's enough of justification. It also just gives you more legitimacy. Like if investors see, oh, this token has an ETF, like Wall Street approved, that makes it also easier to get more investors. So I think like it just has mostly upside for the protocols, and like what happens in the short term isn't really relevant.
So like a Schrodinger's cat situation where we're opening the box. It's like, are there flows? Are there not? There's only one way to find out. Let's make the ETF.
Yeah. And also there might be flows one day. Like, yeah, I like that. Schrodinger's ETFs.
It's a tough sell.
Yeah.
Go ahead,
I
Andrew.
find it very bearish that BlackRock and all of those asset managers, like despite the BTC ETFs being like a resounding success and pulling in that amount of flows, they couldn't get ETH to piggyback off of that success. And I find it very unlikely for them to be able to do it at a later time. Like, oh, like we'll just like try to convince people and market it better like in 6 months, when once enough people are comfortable holding Bitcoin in their portfolios. Like I feel like if they couldn't piggyback at that time off of crypto's run up, like it's going to be even harder when you have to like pitch the performance of what ETH just did in like the past 6 months, and it's like why do you want to own this? Like it's a much tougher pit, and the story is just not as clear. And I think that applies to whatever altcoin they would put in an ETF too. Like I don't think Solana is necessarily any different. Maybe they would have success like pitching it as something radically different from ETH just because of how it's performed. But I don't know. The Sol BTC chart is kind of looking like a compressed version of ETH BTC right now. So, and I imagine if they did like an ADA move, whatever, XRP, it's just like kind of for people outside of the industry, and they're trying to allocate somehow for financial advisors in their client portfolios, like pretty dilutive, I think, and like kind of just difficult to how do you pitch all of those together, and how do you frame it as like a portfolio allocation? It's kind of difficult.
Young Gen Z founders.
Yes, with cash, maybe. Yeah, I do wonder if it is a little dilutive for people on the outside, because it took so long to get this Bitcoin ETF. We've been talking about it for so long, right? Like we've all been kind of like pounding the table saying like, this is a legitimate asset, right? And now if just a ton of like questionable ETFs get listed, it's like, how does that look to people outside of the industry? I don't know. That's an open question. I really don't know, but I think there might be a case that it could be net negative.
I think a lot of it just boils down to like Bitcoin's a better asset, I think, in most people's heads, right? Like if you had a gun to your head right now and it was like, you can only have one crypto asset exposure, what are you choosing? 90 something percent of people in this industry are going to pick Bitcoin. And I don't see why that wouldn't port over to TradFi to a certain extent.
What could be more interesting than trying to sell Solana and move and whatever to the institutional buying base is just listing them on platforms like Robinhood and seeing if retail flows come in, because I think my friends anecdotally are interested in all of these assets. It's kind of tough telling them how to buy them. If they start showing up on Robinhood, maybe that makes a big difference. And I don't think that people have really caught on to how, I mean, people are talking about it, but I mean, Robinhood listing a bunch of meme coins, I think is a big deal. Like, I think they're just kind of signaling right now that they're ready to go full on crypto. And I mean, that's one of the best venues that you could ask for if you want to onboard new capital. I mean, those buyers are ready.
That buyer base is different from the ETF base, right? Like it's,
Yes.
I don't know how you would conceptualize it, but it's mostly retail, probably on the younger Gen Z millennial side versus the boomer ETF market. So like, I guess what you're saying is like Robinhood is probably going to drive more activity in these more long tail, non-major assets for the conceivable future.
Yeah, I mean, I think that makes more sense for them right now than it does for a family office.
Yeah. Also, I do. It is a generational thing too, right? Like the people who are trading on Robinhood, like that are, you know, kind of like maybe the generation below, maybe like Dylan's generation, you know, they're, you know, they're going to grow up and like, they're going to be investing in crypto, like as their first investment. So I think that like the buyer base and like just the flows that we expect is going to change over time when that generation starts like making more money, making more wealth, like having more money to invest in. Like, I think that's going to change the dynamic a little bit. And that's like a, you know, multi-decade thing. That's not like immediate, but I do see that as a trend. And I think people, you know, I think like people who are interested on the institutional level do view that too. Like, okay, down the road, like this is going to be the primary vehicle for investment for like an entire generation. And I think that makes them bullish on it.
Kind of feels like our framing of Robinhood moving into crypto is like a bet on the long tail continuing to develop and outperform. Do we like how convicted are we in that view, I suppose is my question.
I'm pretty confident that the younger generation, I don't know if they'll be as impactful as people think, but they definitely have a different view of how to allocate capital. Like I think they, like if you just look at Wall Street bets and Reddit and options trading, I mean it's a very long-term agnostic / like pure degenerate profit oriented trading view. And it seems like more and more kids or more even just people our age are interested in that. And crypto kind of fits in very nicely. Like I think it does. It's not the most optimistic view, but it's I think it'll be kind of stupid to discount the potential of bringing those people on board.
Yeah, I mean, obviously, like the younger you are, the more risk you're willing to take on. I think also in terms of moving markets, like Gen Z doesn't really have the capital to move Bitcoin and Ethereum because capital is just concentrated in older generations for obvious reasons. So like they can move Bitcoin, they can move Ethereum, but like Gen Z like can only make money by investing in the long tail, or like millennials, right? Just because of the generational wealth gap. So like I think they're just inclined to create any return by investing in those assets. They have more control over that generationally as well. So yeah, I think like it just makes sense. Like riskier, and you could actually make an impact.
The boomers forced us to have to do this. It's not our fault.
But the question is,
The S&P is dead.
when the younger generations inherit all this capital, do they invest it in majors or do they invest in the long tail assets?
I think majors become less and less attractive over time. Like outside of BTC, unfortunately.
You also like want to take on less risk as you have more wealth and capital.
What we got next?
We're just bouncing all over the script. We're going wherever we want. All right, so we kind of covered macro market structure, and the next section we had up was like trade positioning, market cycles. We've touched on some of these. So we talked about how we've latched on to a bunch of different narratives. Do we have views on certain narratives that are completely exhausted, like they won't come back? They're in the process of dying. Some that we've written down are like memes, L1s, L2s. I don't know. We could bucket anything into this. Like my views, obviously, the agent thing is dying or is dead and won't come back. And if it comes back, it'll be of new coins. But we've kind of touched on that in past discussions. I guess, is there something else out there that you're looking at and going, this is down 90%, and I don't think this entire kind of narrative is coming back in a meaningful way?
Yeah, I think it's general purpose chains. Like, I don't think that you'll have a period of time where like general purpose chains are super investable, at least in new launches. Doesn't matter if it's an L1, L2, whatever. Like the delta between what matters to make something like super differentiated, it's just compressed so much, right? And then also at the same time, we're seeing these product-led platforms, these opinionated blockchains start to like really attract attention. Like obviously Hyperliquid was one of the ones that kind of kicked this off. But then, you also have like Abstract Chain, right? Which I'm obviously super bullish on, which, has like a user-facing product that like aggregates user attention. It's differentiated. I think you can say the same for Story Protocol. I think you can say the same for Ronin. And I think like from at least what I've been seeing on my timeline, I think that's starting to become more of a consensus take that this is just the way that it's going to develop. And like to really be competitive, you do need to specialize in some sort of way.
Yeah, I agree. Yeah, my view's always been like, or not always been, but I'm taking the view that just having a higher performant chain doesn't matter on the margins right now. Like we have a surplus of block space. What we actually need are use cases. So your chain can only win if you are enabling a brand new use case that's going to bring new users and new capital, and you're going to dominate that, or you're able to steal a use case from like an existing chain. So you can think like Hyperliquid stole the perps from like DYDX. Solana stole the meme coins from Ethereum. So can your chain optimize in a way that's going to steal something, or is it optimized to enable something that's brand new? And so kind of the ones you mentioned are interesting. On that, I have like a completely half-baked thought that I might have thrown out in some of our other conversations, but haven't really talked about in detail. Do we think that having your core asset, like your L1 asset, seen as money is a precursor for DeFi to flourish on your chain, if that makes any sense? Because I think you look at like REV on Ethereum, you actually break out a lot of those numbers. And so much of that is just driven by the view of people don't want to sell their ETH. Like liquid staking comes up with like 25% of REV, I think, or maybe a little lower. But like that's completely built on people want ETH exposure. Like I'm not going to liquid staking if I don't want like to have any ETH exposure. Lending also, like the vast majority of lending on Aave is depositing ETH and borrowing stables against that ETH. That implies that I still want ETH exposure because I'm going to have that as my collateral base. So it kind of feels like a lot of things out there outside of just like pure speculative meme trading is dependent on people wanting to own your asset. I don't know if anyone has any thoughts there. Just kind of sprung that on you guys.
I mean, for base, you still have a lot of transaction-oriented app revenue, but I definitely think it's an advantage that ETH, which is a larger, more liquid asset than Sol, and that all these kind of mature applications and higher amounts of stablecoin supply exist within the EVM and the ETH ecosystem. And that certainly played an advantage. Like I think ETH USDC on Aerodrome is like one of the best performing pools in crypto. Occasionally you'll see long tail assets that are getting close to supplanting Sol USDC on Solana. That would never happen on Base or on ETH. Like ETH USDC is the go-to pair, and it's just going to be around probably for a while. Being able to use ETH as collateral in all these different lending applications, I think that definitely is a huge value prop. So I can see that, but I also think that there is like a large addressable market just having a transaction-oriented chain. You don't necessarily need liquid staking. You don't need like a huge lending market or a deposit type of product. Good apps, good culture, but it's an advantage for sure. Like I think that's an underrated aspect. Well, that's something that people are kind of discounting too much within ETH's growth story. I think it's a little bit more bullish than people think.
I guess like kind of my question is, based off your thoughts, your half-baked thoughts, Kenji, is does the applications and rev on chain make the underlying chain's token a currency, a cryptocurrency, so to speak, with a monetary premium? Or does like the token somehow have intrinsic monetary properties, which then drives more on-chain activity? I'm sure it's reflexive, but like I'm not sure like if you think it's going one way or the other.
So like chicken or the egg, does the money make the REV or does the REV make the money? Well, I guess my point is like I'm starting to lean towards like the money makes the REV, is I'm moving in that direction. I think Solana is actually like a decent way to express that. Because if you look at Solana, okay, we know they've had very high REV, but we also know that's like completely attached to meme trading. So they've never positioned themselves as money. They have like a much higher inflation rate, which like I'm not knocking in any way right now. They haven't tried to say we should deserve this monetary premium like as explicitly as ETH said. And so you break down their REV numbers. Liquid staking has like a 6% penetration rate amongst stake SOL. Like, does that really makes sense? Lending is super tiny on Solana. Like no one's really borrowing their assets, where you would think it would be a very interesting place for you to actually do that, right? Because if I'm want to go bet on the long tail, why would I give up? People right now are giving up their SOL exposure. They're selling their SOL for that other asset versus you could keep that exposure and borrow against it and still go chase the long tail. And I guess the thought that I'm starting to have is, well, is that because the expression of my base asset as money incentivizes me to keep that exposure as opposed to chasing kind of faster moving markets?
So like for lending activity on Ethereum, what's driving that? Is it for other majors? Is it for like what kind of strategies are people using? Because like we said, most long tail meme coin trading has been done on Solana. It's shifted from Ethereum. So what's the point of even doing DeFi on Ethereum then?
It's secure. If you have a crap ton of assets that you want to move around or deposit or just keep on chain, probably makes you feel a little bit safer to have it on Ethereum. But I think it's also fair to say, or it's important to point out that Solana's low rate of, or the fact that liquid staking and lending is indexing lower on Solana, part of it is because there's a thriving or a larger lending addressable market on Ethereum, but it's also because there's just been so much volume, so many transactions. Meme coins have been one of the most profitable businesses ever in crypto. And so that's why you're seeing outsized share as well. Like Solana is outperforming ETH when it comes to having just pure transaction output and transaction demand. And that's kind of why the economy has been constructed that way on Solana. And so there's a little bit of bullishness mixed in as well with that sentiment. Probably fair to point that out.
Yeah, that's fair. If the meme coin casino was on Ethereum, what would those numbers look like?
Yeah.
All right.
Yeah. And I think actually the transaction, a chain where you're demanding block space for a crap ton of transactions, like that's probably still the most valuable thing that you can have in crypto right now.
Fair enough. Any other narratives we're thinking about in a positive or negative lens?
DPI.
Hyperliquid. I guess to speak quickly on Hyperliquid, like there's been a lot of talk over the weekend about this whale war that's been occurring around a bunch of CT folks trying to liquidate the Hyperliquid whale on his short or her short. Who knows? They're short. But I think, I had this tweet where I basically said that the perps casino has been around longer than the meme coin casino. And it's also been an extremely profitable sector. Not just talking about on-chain, on centralized exchanges as well. It's been a killer business. And so I do see Hyperliquid's value proposition strengthening from here. I think it could be the new casino. I know people in the office have migrated from meme coins to perps. I think it kind of serves the same use case. It is higher skill, higher barrier to entry, but yeah, I mean, I'm still bullish on Hyperliquid. It's not really a narrative. It's just kind of its own story. And so we'll see. I mean, the price right now is kind of around where we had forecasted it to be in our first valuation piece. And so not too worried.
Yeah, I feel like that's a lot of us have probably sold some of our other alts, and Hype's the one that we are going to die with. At least me.
Yeah, I think like if you just want to trade, perps is the easiest way to like trade any asset. Like I know even for the RWA talk, like Ostium, which is like a RWA perps platform. Their thesis is that we can, start doing perps for RWAs right now versus like all this legal and regulatory stuff we have to figure out to get the actual assets issued natively on chain. It's going to take way longer. So like you need the concrete asset in the long run, but if you just want trading exposure, like perps make sense. And given that crypto is mostly a casino right now, like it makes sense that perps will dominate trading there. And if you have the best UX, the best perps platform, like that is pretty bullish in the long, for crypto right now.
It's so adaptable too, because when things were happening, when meme coins were thriving, you could go 3x, 5x long with on Hyperliquid. When all these new L1s were launching, you could short them on Hyperliquid. And right now, with this much volatility in Bitcoin, people are taking Bitcoin action on either end. And so it's just kind of the product that, I mean, granted, if we go into like a crypto drought, perp volumes will dry up. We've seen it happen in the past, but as long as there's still people who are excited and want to trade, like it's the best way to express an opinion across like multiple different paradigms. And we've seen that happen on Hyperliquid with all those, people were just shorting IP, Kaido, Bera at launch, no regard for funding. So these mini metas seem to almost occur on Hyperliquid because the platform is so adaptable.
I think one of the interesting things with Hyperliquid too is like what you're saying, like you can immediately get exposure to like these long tail assets that just launched. And I think like at least a trend that I feel like we're seeing is since you can like launch these long tail meme coins with and express a short position against it, I think it's like changing the market structure of these things, right? Like you look at a lot of the listings on Hyperliquid and it's like gets listed down only, right? And like previously you didn't really have a way to express a short position on that asset. So a little bit unrelated, but I think that that's just an interesting phenomena that's happened since we've seen Hyperliquid.
Any thoughts on like how you see the EVM evolving or the spot market evolving? I think like it seems like most people are in agreement that Hype wins a lot of the perp on-chain perp volume. So growth story is probably coming from that market continuing to grow plus these added features. Any thoughts there?
Yeah, I think the EVM is mostly just optionality. And I was surprised so many people were expecting the Hyper EVM launch to go different. I mean, they launched it extremely fast. There wasn't much to do on day one. There still isn't much to do, but they're kind of rolling out more functionality as we go along. I think that's always been like the asymmetric bet on Hyperliquid, that the Hyper EVM will actually be a top general purpose chain within the pantheon of general purpose chains. Like my base case for it is that you see a few great protocols pop up on there that take advantage of precompiles and basically their value prop is just being on a chain that's in close proximity to the leading on-chain order book in crypto, whether that's a lending protocol, whether that's an options protocol, whatever. I still see that. That's my base case. It's not going to be Solana, but it's going to be, you're going to see like a few great protocols pop up on there that work really well with the order book, and that'll take time. The spot market, I think, is by far the most interesting new thing that's been introduced to the Hyperliquid equation, and it just makes sense. I mean, Bitcoin is hard to trade. People have Sol on Solana, people have ETH on Ethereum, and there are all these traders that probably have spot bags that are currently trading on Hyperliquid that have a ton of capital. And it just makes sense if you trust Hyperliquid to move some of that activity over to Hyperliquid. It makes the order book more capital efficient. We looked into spot versus derivatives breakdowns on centralized exchanges. And a rough estimate you could say is that spot typically accounts for 20 to 30% of volumes. And that could easily happen for Hyperliquid. And so add an incremental 20 to 30% in volumes to already one of the best performing apps in crypto. Like I see that as probably the most exciting thing. I think it should be a more bullish event than Hyper EVM. Like eventually I see that as the surefire product that is going to introduce more economic growth for a Hyperliquid. I see Hyper EVM as more of sort of like a, let's see how it goes. If it plays out, it's going to be great. But spot should be good.
Dude, I feel like the Hyper EVM, sorry, just real quick, like they need to improve the UX for this thing. Like it is so, like I was struggling to figure out how to get on Hyper EVM. Like, I think that that's just like a very, very basic thing that they can improve on that would probably lead to more activity on there.
Yeah, I agree. But, it's a work in progress. I think if you're selling hype here because of the hyper EVM, I don't know. In my opinion, it was never that big a part of the pie of the potential growth story. But yeah, like I agree. Like I think right now I've tried to tinker with it. It's not the best experience.
On the like spot asset side, do you think that trying to figure out how to phrase this, does it matter that assets won't be native? If that makes sense. Like I don't think it really matters, but kind of curious, like should the majority of spot volumes, not majority, can a decent share of spot volume move to Hyperliquid despite it's going to have to be bridged over in some fashion versus being natively available to trade on like whatever chain that asset's listed on?
Yeah, I think one, you can look at sexes, like it's
Yeah.
those assets are not native, and I mean the volumes there are already outperform like what we see on decentralized exchanges, native decentralized exchanges. But also like Hyperliquid's USDC supply is not native either. And so I think there's been plenty of evidence that users for now are okay with it. It's easier, it's better. There seems to be some goodwill that the team has bought. But I think it's fair to say that maybe some larger players that have a crap ton of their net worth in BTC, maybe they don't feel comfortable migrating it over to Hyperliquid. But if you're using Hyperliquid as sort of do-it-all crypto one-stop shop trading venue, I think you probably already trust it enough to buy spot BTC on a Hyperliquid. I think there's plenty of people to kind of win over that are already within the Hyperliquid ecosystem. And then there's more people you can win over on centralized exchanges where this is already a more native solution than that. And so I'm not too worried about that.
That's fair. Like, yeah, markets have already shown they don't care too much. I guess just going to do a temp check here. We keep going.
Do we have any other topics of conversation we want to talk about?
We have a ton of things we haven't looked at. So like Andrew kind of mentioned Sol BTC, like is that front running ETH BTC? We have that written down. We talked a little about Robinhood, but didn't go too deep. We also have stable coin supplies continuing to climb. And does that signal anything? And then we have, is DPIN the next frontier? Is Athena building a settlement layer for TradFi? How do we feel like that? And then we can talk about our reports if we want. So, all right. So we're coming up on time here. Kind of in hindsight feels a little bit like a bearish episode. So maybe we can wrap up with things that, a bit of hopium, we'll call it. So things that we're bullish on, things that we're excited about, whatever time frame. I don't want to go first, so someone else can hop in.
I guess this is it for the cycle. We had a lot of fun, made a lot of great memories. Experienced a few plenty of content for meme enjoyers and meme coin enjoyers. But I think like just to be a little bit bullish here, we might not think that there's been all that much innovation. I mean, I've seen that talk floating around the timeline. I think we made the crypto experience much better for crypto natives over the last few years. We're handling a lot more volumes. We can handle more volumes. We have plenty of block space now. Block space is ample and block space is cheap. UI across a number of different front ends have improved drastically. I think we got through a lot of issues with kind of just, technical debt / like whatever you want to call it that's been hanging around. I think we addressed high FDVs. I think we looked at we basically just did a lot of crypto housekeeping. And I think that's bullish. Like I think not every year has to be filled with a massive inflow of new users, a shit ton of new use cases. I think we found a decent amount of killer apps. Polymarket, Pump Fund, maybe, remains to be seen. Some great new dexes were built. Some great new perp dexes were built. Base is kind of coming up and about. And so I think there's plenty to be bullish on. I definitely think we're still in a good place. And you got to believe in something. So
my hopium, I think, look, we got to break the casino. I think where that's going to happen is DPIN, RWAs, and AI. And I think like it's early in all these spaces, but we're seeing some like really great founders, some real progress, some real revenues being generated. On top of that, we have the best regulatory environment that we've ever seen in crypto. I think friction's going to go down. Institutions are going to come in. I think those two things together, real value coming on chain, plus institutions, plus just opening up the startup environment, the crypto in the US, I think that's very bullish for the space. And for like short-term traders, like might be quiet for a little bit, something could come out of nowhere, but I think the real meaningful long-term value that crypto can enable and that the vision's really about. I think all that's there, and like we have every reason to be optimistic.
Yeah, I think that like what both of you guys are saying is like very apparent when you just zoom out a little bit. Like Arbitrum didn't exist like a few years ago. Like L2s weren't really a thing. Like we didn't have these scaling solutions in place. And so like just the bare minimum infrastructure improvement that we've seen is massive for the long run of the space. So I think, yeah, when you zoom out, things look a lot better. Obviously short-term pain tends to take over and it becomes a little bit harder to zoom out. But I think I would encourage everyone to just try to do that. And I do think like we've seen some like really interesting use cases come out that have like semi broken into the mainstream. Like what you were saying, like with Polymarket Sunny. I'm personally bullish on obviously, more consumer platforms coming out. Like something like Abstract makes me really bullish, just seeing how clean the user experience is and like how easy it would be to onboard to that in Web 2. And I think we're starting to think of these consumer ecosystems in a more like realistic way. We're starting to focus on like higher level UX than just bare minimum UX. So I think that gives me hope that we're trending in the right direction.
Yeah, I think I'm always be bullish on the industry's like collective ability to sort of reinvent itself and pivot to entirely new categories. And even if that means like, once every few years we have a batch of 1,000 projects that go nowhere, but like maybe 1% of them have lasting staying power and are products that people will use going forward, whether that's like stuff like Polymarket or Hyperliquid. It's like if we can create a few products that get widespread usage like that, I feel like that's a success because it kind of just mimics the hit rate that, any startup has in the traditional world. So I think even if that pace continues, it's still a net benefit as we continue to improve things we built like a few cycles ago.
Yeah. I also just to tag on to that real quickly, like I think that crypto is very, very good at creating asset bubbles, right? Clearly. And this is always what happens at the end of an asset bubble, right? Like most of the shit goes to absolute zero, but there are like real lasting use cases that come out of this. And so I think like in crypto, we just accelerate this drastically. So yeah, I don't know. I think that there's clearly a lot of good stuff coming out from like the massive speculative bubbles that we experience.
I agree with everything that everyone said. And I'll end with kind of like a backhanded compliment where I think this was undoubtedly one of the hardest cycles to trade. But I think if you look back on a lot of things that happened or didn't happen, there's actually at least a bit of logic to more of it than in past cycles. And to me, that looks like a maturing industry. So maybe we'll get some more sophisticated capital coming in. We'll get some more sophisticated builders and less grifters. And ultimately, it's like a sign of progress as opposed to things dying.